We've got a prediction of volatility here as we're just looking at Julie's chart. The oil VIX, OVX, is pretty low though. So what are they saying is going to change here?
Well, the unique thing about oil lately is the oil volatility will go down as prices go up because the daily moves are about the same in terms of dollar amount, but that's a lower percent of the actual day. So say volatility, say if oil moves $5, when oil's at $50, that's 10%. And when it moves $5 when it's at 100, or 10%, when it's at 100, it's 5%. So
right.
That's one thing that's changing. And the market's kind of stuck in a range now versus last year it put in that low. And we all know it seems to be a bottom for a while.
So what, Oliver mentioned Vital. Who are they and why should we listen to them? Why does their opinion matter?
Well, as a key oil, key energy company. But for me, my main focus is what they said and what they mean. By volatility, that makes sense. And that range they put in makes a lot of sense, too, because that range, the top, around $62, $60 a barrel. In 2015, when the market was collapsing, it was stuck there for basically between May and June. So that's a key level. And we all know what happens if prices go up. Supply comes on, as we saw in the chart. There's more rig counts. And on the bottom, 52 maybe be a little bit high. I look more around 46 or so because that's kind of where things kind of bottomed last year after the election and after July and August.
So in their assessment, they say that they're going to see some bouncing around between $52, $62 a barrel for Brent. And they attribute it in partly, in fact, maybe more than part, to Trump. And they're saying that Donald Trump is going to sort of keep the market bouncing back and forth. But I thought we had OPEC. I thought we had global demand and growth that was fueling sort of the supply-demand equation for oil. What exactly could the administration do? Is it all about Keystone? Is it about expand? Like, what exactly is the Trump influence here?
Well, everything I see from the Trump administration should be somewhat negative for prices because more supply, drill at will. And it's really more focused on WTI US. Now, we're talking about Brent, so you can add like $2 for Brent, 62 versus WTI maybe around 60. But it's really not a positive factor. And I think the short term, the major issue has been OPEC. Now, OPEC's cut supply, but what has that done so far? There's all the incentives in the world to create more supply. But what I'm worried is what you're seeing in the markets, too, within the markets, is open interest in managed positions have reached record levels, which means the pendulum to the bullish side may have swung a little bit too far compared to almost a year ago. Is exactly the opposite when we put a bottom in.
Do you think that people are, I mean, it seems like people are surprised at how compliant OPEC and non-OPEC members have been so far in those production cuts. Do you think it's justified? I mean, just because they've been doing a good job so far, does it mean they'll hold to it even as oil prices continue to stay under pressure?
Yes, we've seen that before. What I usually like to do is try not to figure out these unknowns, try to focus on more of the knowns. What's happened in the past based on market indications. And when positions get this too far swung, too bullish, too long, and the market's at a stretch level, you're supposed to be careful about being long, just exactly the opposite of last year when it was on the lows.
Okay, let's talk about that. Let's jump into my terminal real quick because you brought a chart with you that I think obviously it shows that positioning very well. So walk us through this. Basically on the bottom panel, we're looking at that positioning, which is the yellow line here, which is total open interest, just looking at WTI. And then you've also got the blue line, which shows you the net position, which is very long. And as you point out, here's where it was a year ago. It's taken off quite a bit. Is this a concerning chart to you?
I look at that as very concerning. If I wanted to enter a new long in crude oil, I would say be careful here, because that is managed money net positions. It's a total net longs and minus shorts. It's really biased to long. And if you look at the opposite, a year ago, it was on the lows. That's when you were supposed to say, okay, thank you, the consensus is bearish, maybe I'll get a little bit more bullish. When the consensus is this bullish at the upper end of the range for the last 3 years and nearing resistance, you're probably supposed to be a little more careful.
And the bullishness is backed up by that open interest.
Yes, well, the open interest will drive the market, but the key thing is the high risk of liquidation. So people liquidate when they don't get their, after a while. And every day that goes by, crude oil becomes less expensive to produce. And that's one negative thing for crude oil. Technology is working against it.